Now we are getting closer to the year end, right? And a lot of people will be like filing for their tax returns. So the government has introduced a set of policies in the recent budget. When someone is deciding to file for their taxes, which tax regime should they choose? Should they choose the old tax regime or should they choose the new tax regime?
Major question. Everyone has been confused over last 3 years after those multiple taxes. Before going to that new and old car debate, let's understand that the Indian taxes are, or the Income Tax Act per se, has been voted as most complex act around the world.
Around the world?
Around the world. I mean, it's kind of a survey, or it is that, because there are two major reasons to it. One, Income Tax Act has been in place since 1961. Though the original income tax came in 1860 by the Britishers, the formal one, and which was amended multiple times. The 1961 Act after the independence has been in prevalent till date, but every year there's a union budget. So how taxes work, all the law around the taxes is that the base act of 1961 has been amended over the years. So every year once the budget comes, what the government does is it makes changes to a lot of sections by way of notifications. There are a lot of additions, deletions, amendments, and because of this, certain times certain amendments have been taken back, certain amendments have been given at a particular point but having a retrospective effect. So for example, some act has come in say 2000, but it says that it will be applicable since 1961. So what happens is, because of these issues, the act has got so complex, there are multiple facets to it, to the Income Tax Act. So as I said, one of the most complex act. So there would not be any straight answer to someone to say that okay, new tax regime is good for me or the old one is good for me. It's basis someone's sources of income. So for someone answer could be new regime, but for the same person in a different year it could change. Or two employees of the same entity could have a different answers.
Personalization is required, right?
Personalization is the most important. So definitely for income tax, someone choosing to say that okay, one of your friend comes up and tells, "यार मैंने old regime select किया है, मस्त tax बचा है." But it's not that way. It would be for his personal finances, based on his sources of income. So each individual, each year is a different analysis. So now there may not be a straight answer, new regime, old regime, but let us break it down into how someone could move around. Just in the same question you mentioned that we are approaching March and people will be filing taxes. So a bit of a general answer that a lot of people may not be aware that we are actually not filing taxes in March. March is a financial year end. So basically taxes are filed for a particular year. So the year being April to March. So it is a year which is determined for the used for, as a benchmark to calculate your revenue. So you need to calculate your revenue, calculate the taxes and discharge those taxes. So March is actually a year ending process for that particular year where you have to complete your workings, but the actual filing of returns or the reporting the same to the government happens after March. Current due date for people who are not under business or audits is the 31st of July. So to make it a bit simple, by March you need to plan your taxes in advance so that you invest, you do a lot of things which could help you save taxes before March, because once the year ends, you can't do anything previously. And then once the year ends, you sit down, assess your income, assess your taxes and file the returns by July. So the due date to file the return is July and to plan your taxes is March. So for new and old regime, I would now kind of go in a bit deep there. So the major difference between the old regime and the new regime is the allowability of various deductions and investment incentives. The new regime has been introduced just last 3 years back. Prior to that, there was just one slab. And to incentivize investments, to incentivize people to make investment savings, invest in your insurance and everything, government thought it fit to give tax benefits. So say for example, if you put your money out of your earnings into LIC or PPF, which are a long-term savings, government wants to incentivize you, and that is where they give you certain deductions so that you invest in something, and because you invested, you provide us the proof and you get tax basically discounts. It's like something like the current e-commerce platforms where you do something and you are given some discounts. So, you know, exemptions, deductions, you can treat these like a cashback or a
Buy two, get
simple
one
thing.
free.
Something very similar to that,
Yeah.
where government gives you a discount or a cashback.
Yeah.
So you are buying a mobile, you are doing a timely payment,
Yeah.
and you get that 1,000 cashback or something like that.
But you need to invest every year.
Exactly.
Right?
So each year, so going back to that question,
Yeah.
that each year is separate in itself, each year is assessed separately, it is taxed separately. When I say each year, it's April to March.
Okay.
So for example, government had given a lot of deductions and exemptions from your taxes, and you avail those, you invest in those, and you get those reductions, and your tax impact reduces. You get a lot of benefits out of those. But the rules were very complex. There were multiple such deductions and exemptions. There was always a challenge among the taxpayers saying that these are so complex rules, regulations, how do we comply with it? We don't want to do all those stuff. The generation X, Z, new, I don't know the terms, but there are a lot of Gen X or I don't know generation, the recent ones. That traditionally people were having that investment mindset, but currently people feel कि नहीं मेरे को invest करके मेरे को नहीं चाहिए baggage. I want to pay off my taxes and I want to have my money for my disposal. I don't want terms and conditions applied, something like that. Just tell me how much I have to pay, I'll pay it off and just leave me around. I don't want to say कि मेरे को 4 साल तक पैसा block करके रखना है. I can't withdraw my money, I can't use my money. There are restrictions on it. So for that purpose, government said, okay, let's do it this way. Let's make it simple. Don't avail any of those exemptions. You can't avail all those deductions. There are specified ones which you are not eligible to avail, and we give a discount. Let's not reduce those deductions, but we reduce your tax rate itself. So to make it simple, you just give us your income. These are the lower rates of taxes, but you won't get benefit of any deductions, and you pay simple taxes and you are through with it. Which is for the current generation. Exactly what the government is progressive. They understood the need of the current generation and they gave an option. Currently, both of the options are live. They could have made it permanent, but there's a huge chunk of taxpayers, the oldies, who have invested a lot in a lot of investments. So yes, old and new, the major difference is the deductions and exemptions, which eligible under the old, but there if you are getting deductions, the rates of taxes are higher. Here you are giving off, you say that okay, I don't want that cashback. फ्लैटली टेल मी कि ये इसका रेट क्या होगा, तो यहाँ पर आपके मोबाइल का रेट घटा दिया है ई-कॉमर्स ने, ऐसे टैक्स रेट घटा दिया. सो लास्ट कॉल, इफ यू वांट टू डिसाइड ओल्ड और न्यू, इट इज ईयर ऑन ईयर, person to person. You need to sit down, you need to calculate it on paper saying that these are my income sources, these are the tax rates. On the both sides you compare the taxes, and if you are not a business entity, you are free to choose either of it which is beneficial to you.
What I was going to ask is these deductions, if you don't mind telling us the 3-4 top deductions that people use would help everyone.
Perfect. So now that we've discussed that, you know, old regime has a list of deductions but higher taxes, new regime no deductions but lower tax rates. Old regime major deductions which are available, starting from, say for example, a person who's a salaried employee, he would be getting HRA, which is house rent allowance. So someone who is invested, he's not bought his own house but he's staying on rent. So whatever rent you are paying, in metros most of the Gen X don't, you know, are not interested in investing in a real estate, but they would like to be free and roam around and stay in rented premises. So the rent what you pay is eligible for a deduction. So your salary income gets reduced to a certain extent basis certain calculations, and you get a benefit out of it. So HRA is one. Then there is leave travel allowances. So if you see in your pay salary slip or something, there will be multiple breakups of your total CTC, which is your gross salary. One of it, the factor is HRA, one is LTA, which is leave travel allowances. So in a block of 4 years, you are allowed to travel, take a vacation, and whatever certain expenses of travel you pay, you are allowed as a deduction. So you get a benefit out of vacation also. So that's few out of your salaried allowances. Now under old regime, you get a reduction of your gross salary. So the taxable salary becomes lesser and a lesser impact of tax. This is as far as salary is concerned. Then there are certain equipment deductions. Like the section itself says 80C or Chapter 6A under income tax, which gives benefit of lot of investments. To start with, the common ones are the LICs, the Life Insurance Corporation, the PPF, which is a public provident fund. There are tax saving mutual funds, which are called ELSS, Equity Linked Savings
Account.
Scheme. So these are all tax saving mutual funds. So to make people invest in equity and to boost the equity market, government came out with this incentive as well. Then there is National Pension Scheme, your tuition fees of your children, school children tuition fees, Mediclaim insurance premium, donations. If you make donations to
Charity
trust, recognized charity, not every charity trust, but certain recognized charity trust, you get deduction or tax benefit out of your charity also.
Even uniform allowance, right?
Uniform allowances, education allowances for your children. There are multiple allowances which are allowed. As I said earlier, there are rules and regulations when and how much you would get this as a deduction. So these are a bit complex calculations, each having its own terms and conditions, but once you meet those terms and conditions, you get the tax benefits. So overall, these are the major deductions which are allowed under old regime, which will go out of if you opt for the new regime.